Welcome to the Elevate Your Equity podcast, where we, as married busy professionals, leverage real estate investing to unlock the 3+1 degrees of freedom: health, location, time, and financial.
Today, we are honored to have a high-flying, very active real estate investor, Mr. Tim Vest, on the program. Tim, how are you today?
Doing well, Derek. Thanks for having me on, man. And thanks for that intro. High flying. I love it.
Yeah, high flying is just kind of off the cuff. I know that we're not in an airplane, or either one of us are right now, but that's the only way that I can describe all the success you've had recently. And for those people who do not know Tim has been in the business for 15 years, and he's done it all, from partnering with developers to developing raw land and purchasing and investing in single family rentals, fix and flips, multifamily, and hotels. And he's currently the owner and partner in multiple apartment communities. Outside of his passion for real estate, Tim also enjoyed a 20+ year career in technology and then founded multiple startups. So we're talking with someone with a very diverse background. And also, you know what, Tim, I got to be honest with you. It makes me feel real good that I'm sharing the industry that you have chose after such a very strong and probably dynamic career. So now I know that I'm in the right place. Let's put it that way.
Yeah. You know what's interesting? It's funny that you say that. I saw a list yesterday. It was around net worth or something. It was one of those just kind of like brainless moments where you're just reading something. Yeah. And it was crazy how many folks, like, for instance, Bono, like, I don't know everybody's interest in U2 or whatever, but Bono is a very diverse real estate investor. And there was a list, there was like a 20-person list, and I think 11 out of the 20 people on that list were real estate investors. And I was just like, yeah, that's pretty good company to be in.
That is really good. I love it.
Yeah.
There's that statistic out there, Tim, that says that 90%, or no, maybe not 90, but a vast majority of the millionaires out there for many years have gotten their wealth or kept their wealth because of real estate in some degree or capacity. So we are definitely in some good company for sure.
Yeah, no kidding. It's good company to be in. And when I first started doing some of this stuff, I came across a guy, like one of the first guys I ever tried to raise money from, right? Talk about trying to hit a home run swing. This guy was worth, I think at the time he was worth $320 million. And I was just chatting with him. I was like, how'd you do it? And he was like, man, I was an accountant. And the guy's in his 80s. And he's like, I was an accountant up in New York. And I just kept noticing every one of my wealthiest clients had real estate. He's like, man, I got to buy some real estate. And he started buying real estate, bought some more. Fast forward 40 years, the guy free and clear owned $320 million worth of real estate. And, I was like, I think that's where I want to play.
That is awesome. I love that. I love that distilled knowledge and the unfair advantage you get as being not a realtor, but a real estate focused accountant who gets to see all these people with their net worths climbing every single year. Must be an interesting perspective to see it from. And you kind of scratch your head and you're wondering, well, gee, why aren't I doing that? And I love that. That's a great thing. But, let's back up and start at the very beginning, like we like to with a lot of our guests, right?
Sure.
You have had a really diverse career, and, you've selected real estate as one of the places for you to expand on over the past 15, 20 years. And so can you talk a little bit about where you got that spark back then for real estate investing and kind of how that's propelled you to where you are today?
Yeah. So, a couple of things. My family, a long history in North Carolina, family farm dating back to the early 1800s. So land, real estate, was always a big thing because, way back when you really measured your net worth in land, and that's absolutely how my great grandfather did it, and when he lost some of it during the Great Depression, that was a big blow to him, and I remember my grandfather and even my uncle now, spending time like recouping, going back and purchasing what he had lost, at that time. And that was a big deal to them. Had another uncle that I remember growing up. He basically owned the entire downtown area of this small town that they lived in. And I just remember thinking, man, that's cool. Like, you own this building? That's cool, And And I think there was a bank in it at the time, and I was like, man, that's really cool. Oscar, you own this thing? And so that was always kind of in my head. And then, my dad was always big into land. And then one of the things that really stuck with me is when I was in college, I worked my way through school and I worked at a law firm. And the senior partner, this guy, Howard, he looked at me they threw me a little graduation party. And he looked at me, he goes, if I can give you one piece of advice, buy as much real estate as you can. And at the time, I was a 22-year-old know-it-all, right? And I was like, whatever. I got a job. They offered me 31.5. I'm gonna go off and make my 31.5 and be good. But that always kind of stuck with me. And then around 2005, 2006, I started a job, and I was, making good money in IT, had discretionary income, ran into a couple of guys who had the same thing, and they were doing real estate. They were buying real estate. And I was just like, man, let's talk about that. So we partnered up, got into some land flips and stuff, and been doing it ever since. That's kind of where it all started.
And if you don't mind sharing with the audience, what does your portfolio look like today? Because you've got raw land stuff, developments, single families, flips, multifamily. What does your portfolio approximately look like?
Yeah, I am primarily focused in multifamily now. I do have some mixed use where I do have a couple of retail commercial spots, but mostly came across those because there happens to be apartments upstairs and there just was some commercial on the bottom. But I'm highly focused on multifamily. And between my own stuff that I actively manage, we're right around 600 units. As far as GPLP types of opportunities, just north of 1,100 units total managed and invested in.
Yeah, that's incredible. So, I mean, I know you've had a very long career, but I know for the past couple of years, your trajectory has just completely skyrocketed. We were talking about that before we hit the record button here today. But, before we talk about that a little bit later on in the show, I want to ask
Sure.
you, let's go back to some of the early days and maybe this transition away from the point in time where you're working W-2 and then you're transitioning, that side hustle period, right? Where you're kind of doing stuff in the middle and then you're off doing this full time. Can you talk about the skills you're able to redeploy from both your entrepreneurial ventures and your full-time gigs into real estate investing for inspiration for the audience?
Yeah, a couple of things. As I was coming up through my IT career, a lot of that was consulting and customer facing. So I had a lot of experience going into job sites, going into other people's companies, and quite frankly, doing a lot of kind of what they called red team work when projects were in trouble, going in and pulling them out of trouble. So I had a lot of experience kind of just working through problems, right? Working through problems, working with customers to focus on problems and work through them. And that's certainly something that we do in the real estate world for sure. And then the other thing that I would say is team building, being able to scale in team building. People, process, and putting those in place. That was kind of where I got to in my career that I really, really focused on and excelled at, as I was able to build really, really high performing, efficient teams that quite frankly didn't need me to run. And which actually helped me in the transition phase. But I would say those were probably two of the biggest places. I'm able to go in and when our team gets really, really frustrated about something or whatever, and people have a tendency to focus on the problem and not the solution, right? And I'm able, and I'm even going through that right now. It's like, hey guys, that's the problem, right? We've identified the problem. Let's do the solution and the plan to get there, and let's make a decision and move forward. And it's kind of that ability to keep the ball rolling, keep the progress going, no matter how small, that I've found has been one of my biggest assets in the real estate world. Even today, we just got off the partner call this morning and got a couple of, most of our stuff's doing well, but as if you get enough of it, there's going to be always that one that's kind of lagging behind. And we had a conversation about that. It's like problem, solution. All right, solution, let's go.
Yeah, if we don't have problems, then we're doing something wrong. And the other thing that I wanted to talk to just real quick, just make a comment on this, then we can move on, is how you said that, you know, as these problems come up, you get to rely on your team. There's a problem, you need to find a solution and get it done, right? I think that what gets missed in a lot of things is a problem comes up, and sometimes you often quickly jump to a solution thinking that that's the right solution, but it may not be.
Right.
The good thing is that if you have a team, there's most likely a better chance, because you have more eyeballs looking at it at the same time, that you're going to have a better solution that is actually rooted in the why, right? You're going to have a solution that says, why is this happening, right? Because a lot of people will get the problem and they'll say, let's just get this fixed. But you have to understand what is causing the problem so you can cut it at the root. And if you have a team who's well versed at doing something like that or has experience, then you shortcut all of that. So it truly is as simple as problem, solution, process. But, you know, I just want to flag out there to some of the investors who are maybe flying solo, right? Take a little bit of extra time, take a breath, right? Take the afternoon and try to figure out what the true cause of the problem is before you diagnose it and run to the solution.
Yeah. And two, really good point. And two, like, even if you don't have a team, if you're flying solo, don't hesitate, right? When you think you have that solution, don't hesitate to call somebody, you know, and just say, hey, can I run this by you? What do you think? And you know, don't get caught in that analysis paralysis, right? But at the same time, you know, like you said, it's always good to get that second set of eyes and let somebody play devil's advocate with you for a second, and then, you know, okay, cool, all right, it's what, let's go. You know,
I love it. I love it. Yeah, couldn't agree with you more. So over your career, you've already touched on the fact that you've explored many different sectors of commercial real estate and even residential real estate. Can you talk us through your decision making as to how you went from land entitlement or land flipping to single families to commercial, whatever it is, you know, between A to Z? How did you get through all of those? And what made you, looking back, what was the common thread that helped force you change or pivot through each of those adjustments?
The common thread was just learning lessons, right? Learning lessons, applying them moving forward, and adjusting. Now, what made me learn those lessons were different things. You know, with the land flip thing, I would say 2008 came along and just taught me that lesson. That was, and I'm sure I'm not the first guy to tell you that. So, you know, land flips, land flips are beautiful. And by the way, guys, they're extremely popular right now. In fact, I think, Derek, you and I are in a group, or we know a group that's doing a lot with land flips. But yeah, land flips are very, very popular right now. They were popular back then. Now, the problem with land flips is sometimes when you get into them, they don't cash flow. They're all about sell price, acquisition, sell price. And, you know, when you get into something like that, and something like 2008 comes along and you don't have cash flow, your runway is real short. So that was a lesson in 2008. Moving into 2011, I was like, okay, I'm going to go find things that cash flow. So I started doing fix and flips, and, you know, like every 3 flips, I'd flip 2, keep 1, right? And build some cash flow. The things I was keeping, I was building cash flow. Now, the lesson from that was around 2018, I looked at this and said, man, I've really built a job for myself that does not scale very well.
Yeah.
So I want to rethink that part of it. And I had done very well. But I wanted to rethink that part of it. Like, how can I scale beyond this? And, you know, I looked at a lot of different things, but it just kind of, you know, you have that aha moment, and it's like, how do I get more tenants under one roof, right? And oh yeah, multifamily. So, you know, kind of sold off that portfolio, moved into multifamily. So I would say lessons learned is the common thread. How I learned those lessons, those were different at different times.
Yeah, very well said. And I think that, you know, for a lot of people out there, I want you guys to be aware that to be successful like Tim, you know, I can't remember where exactly I heard this. Maybe it was in, well, it was in some book that I read recently or reread. But if you were to take a plane from Los Angeles or maybe Seattle to Miami, right? That plane believe it or not, will be exactly on course only 2% of the time or 3% of the time. It's all about these little adjustments and the journey itself. And so, from what I've learned from Tim here is that this journey is a constant evolution. You're
Yeah.
always looking to pivot. And if you know where your end goal is, you can at least set your sail in that direction and just trust that you'll make the right decisions to move and make adjustments. So I love that. The first lesson was, it's 2008, you have macroeconomic forces at work. And then the second thing, which is like the black swan type of thing. And then the second thing is you got a job for yourself, but not really a business. And so, well, actually a business, but it's mostly a job for yourself. And so those two lessons are very important. Probably took you a long time to learn, but now you have them. They're part of you now. And I think that you've been able to leverage those beautifully to where you are at this point.
Yeah. Thank you.
So,
Thank you.
yeah. So next point I wanted to talk about was mindset. Okay. Now I know that we, in our form that we send out to all of our podcast guests, we ask what your superpower is, and you put in there very curiously a willingness to fail. And I thought that was really fascinating. And what I want to talk about now is circle around this point a lot because there's a lot here to unpack. I want to talk about how much of your success would you attribute to your ability or willingness to be able to fail and move on after that?
I would say almost all of it, honestly. There's a popular quote out there, and I'm going to paraphrase it. And I think I said something about it this week. It's, Muhammad Ali always said, I've never lost a fight by getting knocked down. I only lose when I don't get up. Right.
Yeah.
And
oh man.
I've always kind of taken that to heart. And I used to say it a different way to my teams, right? I had teams and my guys would sit in rooms sometimes and they would just get stuck. They would get stuck. They'd have 3 decisions in front of them and they'd get stuck. And when you really, really dug into it, it's like, guys, why are we struggling? You have 3 options here. Why are you struggling? Well, we don't want to be wrong. We don't want to fail. I'm like, the biggest failure you can make right now is not making a decision. That's failure. I always told them, and some jobs are a little different, right? I always used to say, guys, we're not doing heart surgery, right? Nobody dies if we make the wrong decision. So here, just pick one, move forward. If it doesn't work, guess what? That's not failure. We've actually eliminated an option. We learned something and eliminated an option. Now we can go see if one of the other options, based off what we just learned off that, are more likely to succeed. So I think that's just kind of it, right? Like, I've always kind of said, the worst thing you can do is just stand in fear, right? Don't be afraid to fail and don't look at it as failure, right? What's the other one? Like failure is just success training or something like that. I think that's the other one.
Yeah.
And I know we're throwing out little with phrases or whatever, but they're true. I mean, they're true. They really are. Like failure is just learning how to succeed.
Yep.
So that's
I was
go
going to say,
ahead.
sorry for jumping in there, but I was just going to say that Muhammad Ali quote that you mentioned is super powerful because it very much is the case. And that's what I really want the listeners to understand here, especially coming from someone who has gone through so many different experiences on the tech side. And I guess in a law firm also, apparently, in the early days
Yeah.
as well, is that, you should not be afraid to fail. As a matter of fact, the way that I look at it, and I want to get your comment on this, is you don't know what your true capacity is unless you face your fears and fail, right? If you try something. So, if you don't face your fears and push the bounds of what you're capable of doing by facing that resistance and potentially failure, how will you ever get anywhere? How will you ever achieve anything that's worth doing? So, just wanted to hear your comments on that, if you found that to be the case, or if that's a good way to look at it as well.
Yeah, I think it's a great way to look at it. Because one of the biggest things for me is like I never want to be 75 years old looking back and saying what if, right? Like I just want to know, like, hey, I tried it, didn't work out, got punched in the face a little bit, but at the end of the day, I'm still here, and I know that wasn't for me, right? So I think that's just kind of how I do things. Is I just want to give them a shot and never kind of wonder what if I had done that or not.
So I want to talk about how your mindset has evolved over your career, right? Can you if you can, I know this is probably a tall ask, but maybe just infer what you think that you would have answered back in the day. But what does the word failure mean now versus what it probably meant to you when you first got started? And how has your
Um,
mindset evolved?
oh, that's a good one. That's a good one. I think one of the things for me where it's changed is, you know, I I thought there was a very clear path on how you did things, right? Like you graduated high school, you went to college, you graduated college, you got a job, you spent however many years going through the corporate routine, right? And I think I had a mindset of that's how it worked, even though I knew in the back of my head that's not what I wanted to do. Like I was I met some great people, had some great managers, great bosses, and stuff like that. But I was miserable in the corporate setting, absolutely miserable. And I think that's probably, but I always for a while I just said, well, this is just how it is. This is what you do, right? This is what you do. And I think that's probably one of the biggest mindset shifts I had. Is at some point I was like, wait a minute, it doesn't have to be like this. And that group that I mentioned earlier, I think the fact that having that mindset of abundance rather than scarcity was a big shift for me, right? I think when I kind of stopped looking at it as where's my next dollar coming from and started to look at things more of like there's plenty out there, go grab it. And I think that's where it really shifted for me is at that moment. Like I always thought like where's the next dollar coming from? And then I started to realize I was like, man, it's actually not that hard. You just got to put a plan in place, put the effort behind it and make consistent effort and progress towards that. And it starts to take care of itself. It really does.
I love it. And can you peg a certain moment in time where you made that realization from scarcity to abundance, or at least became aware of it?
Um, where a specific point in time. I think one of my first little startups was probably it. I had it, and this was on an IT startup. I had a little apparel company, and I started to notice that, like, hey, if I did this, money came in. If I did this, I made some money. If I did this, I made some money. If I treated people right, I made some money. That kind of thing. And that's where I started to realize I was like, it's really not that hard. It's really not that hard. And maybe there's folks that'll listen to this that have a different idea on that, but that's just been my experience. It hasn't been that hard. And please don't mistake that for you don't have to work hard, because it did.
Oh yeah.
There were and there still are a lot of 12, 14, 16-hour days. Yesterday was a 17-hour day. um, there's still a lot of that going on. But like one of my old mentors said, he's like, being poor is hard, and hustling is hard. He's like, choose your hard, right?
Yeah.
But there are lots of ways to make income. There's lots of ways to make money legally, and it's really there are tons of options out there. And once you kind of realize that, I think it frees you up a little bit.
Yeah, this is very, very well said. Do you have any advice out there for people who are maybe struggling with this flip? Like they're probably listening to you right now and saying, "Look, I hear you, but I don't get it that there's abundance out there." Maybe someone who's listening right now is stuck in a scarcity rut, or maybe they're very much attuned to just saying, "Well, if someone makes a dollar, then I lose one." And that's a fallacy, as we know, because money flows where effort goes. One of my favorite books, The Richest Man in Babylon, kind of explains all this, right? From a very ancient type of perspective, that those principles are still valid today, and wherever value is created, that's where money goes. So, what would you say to people who, like I said, are stuck in this scarcity loop, and maybe you can help them elevate their mindset there?
Yeah, so I don't have anything earth shattering there. I'm gonna be honest with you, but I'll go back to kind of like one of the things that 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 a guy that we probably both know, Devin Elder,
Oh
um,
yeah, good
kind
dude.
of said one. Yeah, great guy. Kind of said one time that kind of was like an aha moment for me. And it's so simple though, right? It's so simple. He's like, I don't think you really need as much as you think you need. You know, I don't think you need as much as you think you need. And he's like, just go through your finances and look. Right. So I sat down and I was like, he's right. Like if I actually just want to pay the mortgage and put food on the table, I really don't need that much.
Yeah.
And that was an aha moment for me that kind of made me realize like things aren't, first of all, they aren't as scarce as I thought they were. And I didn't need as much as I thought I did. But then I think that other moment for me was kind of just a shift of, and I don't know this actually answers the question, but it was kind of a shift for me of like what is really scarce versus abundant and stuff like that, and
Hmm.
how does it all apply to what makes me happy, right? Because what I did know is I was miserable in the corporate world and I was making very good money, but most of my time was spent being miserable. And the only thing I did know that was scarce was my time, right? Like time was scarce. And so I was like, I can't continue to be miserable because I only got so much of this, right? So at some point, I just kind of let, what, the money's going to take care of itself, however that looks. And I'm just going to go out there and kind of do my own thing. Um, so I don't know that that's really good advice other than maybe just a reset of priorities.
Yeah, I will disagree with you there. I think that that's awesome advice. And
Yeah.
a couple of things that I want to also add to the audience is, and Tim alluded to this earlier, get a good group of people who can
Yeah.
challenge you. And secondly, live in gratitude. Take stock of the fact that you're healthy and even able to have the opportunity to listen to us converse today, right? And that you're in a state of mind where you can focus on growing yourself instead of having to survive, like focusing on survival, where your next meal is going to come from, right? Because let's face it, most people in the United States or North America in general have a lot of great things going for us. And so if you live in that abundance and do an audit of people that are injecting negative energy into your life, I think you're going to start to find that you should find yourself very grateful and you'll start thinking more abundantly. So I just wanted to add those 2 points and see if you agree there too with that.
Yeah, I agree. And I think you brought up something there, like be that, kind of positive energy, that kind of positive energy thing you mentioned before, like adding value and the money will come. That in itself is a huge value. Because I think one of the things for me, as we're talking about scarcity versus abundance, is having a mindset shift from transactional to more strategic. Because I think sometimes there's a tendency to say how much I need to get everything I can out of this transaction rather than, okay, if I gave a little bit today and made it easy and just came, just was just easy to work with and just positive vibes, whatever, right? And didn't try to get everything out of Derek for this one particular deal, then Derek's probably going to be like, Tim was pretty easy to work with. I got this other thing. Let me go back to him. And it doesn't happen all the time. It's not always that way. But for me, it has been more. It has been true more often than not. I still have that little apparel company, and I haven't asked for a customer or sought a customer in probably 8 years. Yet I still have plenty of business coming in on that, and it's all because I've always treated my customers like that. I've never tried to get every nickel out of them. And they're just like, Tim's easy. Let me go continue working
Yeah.
with him. And I'm seeing it in the real estate world as well.
Absolutely. Now, I couldn't help but notice this too. And again, I think everything you said is spot on. But now I have a tally in my head of that's 4 industries that Tim is invested in or is interested in. That's incredible, man. That's awesome. Just a little sidebar there. But I want to shift a little bit more and move into what things are like right now. Okay. Most likely this podcast will be coming out at the edge of Q3 or Q4 2022. So understand that what Tim says here is not a financial prediction. So please, make sure you consult with your attorneys or your financial planners, anyone that you trust with your finances, including yourself, your own education. But I want to ask you is, and we're going to get into more like, current stuff right now, but your mindset, right? Can you describe how important mindset is for investing in a time like this right now in Q3, Q4 of 2022?
Yeah, we're gonna see how this ages, right?
Yeah, it's timeless. I'm sure it's going to be timeless for sure.
Yeah, good question. So how's mindset? And important right now. I think it's extremely important. I think keeping perspective is completely important. Especially when, the big talk right now in real estate is rates, right? Um, and rates are going up, and they're going up, and they're going up. And, I think keeping perspective is really important to, like, making sure you got the right mindset. I'm still very aggressive. I'm still very aggressive. I see this as a really good time to buy because, one, seller expectations are shifting, and the idea that I can sell my property for more tomorrow than I did than I got for it today is kind of going back a little bit. So it's helping negotiations. It's helping with opening the door for actually having a negotiation. Um, so my mindset right now is very aggressive, and part of that too is because of perspective, right? Like, I think people got used to those 3% interest rates and lost sight of the fact that 5 and 6% is really not that expensive, and it's not abnormal. In fact, historically, it's actually still pretty low, and so I don't have a problem at 5 and 6%. And I also have always kept, regardless of what's going on today, I've always seen real estate as a long-term investment. It's a long-term investment. I know we got used to those quick flips. I even flipped for a while. I know we got used to that. I know we got used to buying, a 20 unit or an 80 unit property in 2019 and then turning around and selling it at the end of 2020 or beginning of 2021 for, a 40% markup, stuff like that. I know we got used to that, but that's not normal. And real estate's always been a long-term play. And in my head, I look at it and go, hey, if I can get it today and the numbers work and it cash flows today, I'm happy to buy it and sit on it for 10 years. So when I keep that perspective, I don't really worry too much about what's exactly happening today.
That's awesome. Yeah, I couldn't agree with you more there. I think the fact that as long as you get debt that is more or less fixed or has caps, right, in place, you're going to see yourself winning in this inflationary environment as well. So yes, interest rates are low, seller expectations are shifting. We have, inflation running rampant right now because of supply chain things, not a, it doesn't seem like it's stagflation, which is a really good thing. At least that's what a lot of the economists are saying here in Q3 of 2022.
Right.
But yeah, I couldn't agree with you more, Tim. And I think this is a perfect time to buy. So for all of you out there that are waiting for 2008 style recession, please don't do that to jump in, because if you can find the right property and keep the perspective, like what Tim was saying, you can find a great deal and just focus on value addition, right? Like just get good fundamentals in place, get fixed term debt for, the near term, 5 years, 7 years, 10 years, if you can get agency, and focus on adding value and let inflation do the rest, right? Get good tenants,
And
good fundamentals, and you're all set.
yeah, and that is a great point. That's a great point because people who jumped in 2008, they did. Hey, congrats, good job. I told myself in 2008, not doing this again. I'm going to be on the other side, right? Like I learned a lesson, right? But go ask somebody today if something they bought in 2004, 2005 that they still have today. Ask them if they regret it, if they regret buying it in 04 and 05 and not 08. I guarantee you they're not going to tell you, yes, I regret that decision. So, just keep that in mind, right? That was a bump. That was a bump. It was a big bump, but it was a bump. And, at the end of the day, keep that long-term view, right? Because again, we talked about time and you talked about debt. Like the decisions I'm making today are based on time. Like lenders come to me with options and they go, you can have this rate, but you have a year window, or you can have this rate and you can have a 4-year window. And I go, I'll pay the higher rate. I want the 4 years. Because in that case, you can buy time, right? I will. That's the thing that 2008 taught me, right? If I had been able to ride a 2-year window out at that time, I would be in a vastly different position, right? And that's really the lesson there is like, guys, like real estate, if you can buy time, if you can buy yourself that time, you're going to be okay, most likely. So
Yeah, I couldn't agree more. And there's a million reasons why commercial real estate is an incredible investment. And Tim and I could talk about it for a really long time, but there's plenty of resources out there that you guys can look into to explore
Sure.
that, including Tim's social media feed. He's got a ton of material out there, so you can check that out and learn more about it. Now, a couple last points I want to make before we head into the rapid round and close up the show is, you know, is there anything that you can say right now in the economy in terms of cap rates, demand, inflation, and rents in the coming near to midterm? And again, I'm not asking for a crystal ball. This is just your opinion. So for all you listeners out there, please understand that you need to do your own due diligence here. But is there anything that you can say about commercial real estate, mainly for the multifamily sector, since that's the common thread that you and I have and most of our listeners? Anything you can say about what you've been learning recently that you can share with the audience?
Yeah, I think what I would say is in terms of like kind of what we do, I think there's still a little bit of speculation going on and with folks we know around where rents are going. I think guys have gotten really used to these huge rent bumps in the last few years, and I'm not here to say that they're not going to continue. I'm totally not. I just know at some point there's a point where people cry uncle, right? And I don't know where that is. So that's one of the things where I'm right now. If you're asking where I'm being one of the most conservative, it's on where rents will go. Um, I think we're going to continue to see 7, 8, 9% bumps for the next couple of years, but I'm not counting on it. And my underwriting, I'm more in the 4 to 5% range. Um, and I think that's one of the things I would say right now. If there's one thing that makes me uneasy right now that I want people to be really, really cautious about, it's on those rent escalation assumptions. I think and guys, there's a ton of evidence out there and a ton of data out there that support that we're going to continue to see huge bumps for the next little while. Um, I don't disagree with that data. I would just say be cautious. Um,
Yeah, I would agree with you, Tim. And also, as a limited partner, if you guys are looking to invest as a passive investor, check out those P&L projections. Look and see where the rent projections are going. And then also cap compression, right? Watch for that. Make sure that whoever you're looking to partner with has a great exit strategy in mind, because some of the operators out there that I've seen, Tim, are just counting on these massive, massive rent increases and cap compression in order to make a 25% IRR return in 2 years, right? Like I'm thinking Arizona, some of the Sun Belt states that have been seeing that type of growth, but I just be wary about it, because you're right. I think at some point this is all going to stop. It's going to slow down at least. And so
yeah.
counting on that exit and then not being able to have that, you could paint yourself in a really tough position, because I've seen that happen already before in Austin as well recently. So
Yeah. I think that's a really good point, because I think cap compression, counting on cap compression is very, very dangerous. I think you can we when we underwrite, we write, no matter the market, we write to cap decompression. Now, depending on where it is, like a Phoenix or say a Raleigh, North Carolina, something like that, we'll write to a slightly slower cap decompression for markets like that, but always cap decompression.
Yeah, same thing here. We always expand our cap rate. I think we have we use the SDA, the Michael Blanc syndicated deal analysis, which is a classic tool, and it's a really great thing to have. And I think what we do is we expand the cap rate 5 basis points, I believe, every year that we hold. So for every year that we hold on, I'm not sure if that's aggressive. It just depends on the market too, but that's usually where our average is.
Yeah.
So
that's pretty good.
Yeah. Anyway, I probably could talk with you more about this stuff offline, but anyway,
for sure.
What I want to do now is I want to pivot over, and again, I think we could talk about this stuff for days, no doubt. But we're going to head into our rapid round, which is the final part of the show here. And these questions that we ask every one of our guests are meant to be answered in a 30-second time frame. And so, if you're ready, we're just going to rapidly ask them to you.
I'll try my best. Let's go.
All right. Okay. Question number 1. What book do you think has had the biggest impact on you, and why? And we ask that it not be the Bible or Rich Dad, Poor Dad, or any of those books, because we get them all the time.
Okay. Yeah, sure. So for me, I'll just go with something recently, actually, and that I've read it 3 times in the last year, was Who Not How.
Yeah.
That one's been huge for me, simply because as my business is scaling, I'm having to find more who's and start doing a little less how, and which is really tough for me because I'm a like, let me go look on Google and figure it out kind of guy. So yeah, who not how.
That's awesome. I think we may need to talk a little bit more about that. I've read the book a couple of times, but I also struggle with this too. So you're a
Yeah,
man of my own heart. Awesome.
yeah.
Number two, if people wanted to emulate your success, what do you think is the first actionable thing that they could do to follow in your footsteps?
The very first thing is, I would say, sit down, figure out a 2-year roadmap, put yourself on it, and so you asked for one thing. That's it. Sit down, figure out your 2-year roadmap, put yourself on it with steady progress towards it every day.
Love this. And by the way, folks that are listening, I know I'm expanding and probably going to break the 30-second rule here, but notice that Tim said 2 years, not 10. 2 years is, at least in the circles that we run in, is a very well-defined, quantifiable amount of time that gives you enough time and runway for you to make a major impact with a minimal amount of commitment each day, right? As long as it's consistent. And I think where he's going to go with this is taking a 2-year goal, breaking it down into quarterly goals, and then weekly goals, and then even daily goals, right? And making it as quantifiable and easily check offable as possible, right?
Yeah,
Hopefully
and
I'm picking up on that, right?
no, you're exactly right. And remember, it's a living, breathing thing. So it's a
Yeah,
2-year roadmap that's constantly evolving based on where you go. And that's why you have daily, weekly, quarterly, is those are check-ins. Those are check-ins.
bingo, major. All right.
Yeah.
Number three, what is one tool, process, or hack in the last 3 to 6 months that you've employed that can help save time and or effort? And it can be on the personal side or the business side.
Yeah. So I would say bringing on an assistant. That has been that's been the hack, right? Like getting help. Right?
Yes.
Major earth-shattering
Who, not
hack here,
how.
right? Yeah, bringing on an assistant, because there's all this little stuff that I was doing that literally does not make me money or move me towards my goals. That takes up a ton of time and makes me less effective. Takes up that brain width, right? So getting someone to take that from me.
Excellent. And just real quick, I know, again, we're going to break the 30-second rule here, but how are you managing the workflow with that assistant or with your assistants now?
Yeah, so we sat down before we ever hired this person. We sat down with a list of things that we just listed out our day, right? Like, what do we do? And we started to, if this did not get me towards this goal specifically, we put a check beside it and we added it to a list. And those are the things that we went to our assistant with and handed those things off. And then we have regular check-ins, weekly check-ins on progress towards what she's supposed to be doing.
Beautiful. And so just a little bit more clarity, because that's the type of person I am. You did like a 15-minute interval for each hour on the hour, and then listed out what you did on the average day, or you actually logged it for like a week, or how'd you guys start with that?
No, we actually logged it. And then we went back and met. And then I say we, it's one of my business partners. We actually we logged it, and then we sat down and met, and we said, okay, let's go through it and what's missing or what shouldn't be on the list. And actually what we found is some things missing.
Oh,
We didn't take anything off the list.
awesome. Cool. Thank you for the insight into that process. Okay. Number 4, if the people that you know had to describe you with one word, what do you think that word would be and why?
Transparent. I've been getting that a lot lately. I'm pretty, if you've seen my social media, I'm pretty open about success, failures, struggles, you name it. I don't cover it up. In fact, I'm probably a little pessimistic or a little cautious of folks who do nothing but post wins.
Yeah.
Yeah. So, I get a lot. I get it a lot, even from folks that I kind of coach and mentor. Is like, man, you were really transparent. So I'll go with that.
Yeah, I love that. That's great. And by the way, guys, like that is a sign of someone who is comfortable with failure and success in the same hand. So I think the better that you can emulate Tim, so follow him on social media, see what he's posting, make sure that you start to get yourself more thinking like that, because clearly it is working wonders for him as well. All right, number 5. What is one small thing that most people just don't know about you?
One small thing that people don't know about me. Okay, so we'll go with something a little bit funny here. Is I actually told Dustin Hoffman to shut up one time.
No way. Come
Yeah,
on. No way.
yeah. I didn't know it was him. I didn't know it was him. To be fair, uh, yeah, I'll explain it in 10 seconds or less. Right. I grew up around Southern Pines, Pinehurst. They were in town filming this movie. I think it was called Hoffa, maybe. And
Okay.
there's not much to do in town there. So he and another guy were just at the movie theater, and they were sitting in front of us and they were talking. And I was just a little punk 17-year-old guy, and I just leaned forward, and instead of saying, "Could you please be quiet?" I said, "Would you shut up?" And next thing you know, Dustin Hoffman turned around and was like, "Oh, I'm sorry. I apologize."
What a great story. I bet you didn't make that mistake again. I bet you didn't tell anyone in the future after that to shut up.
Yeah,
Maybe not.
not unless it was truly deserved. No.
Yeah, I get it. How funny is that? Oh my gosh. Wow. I love that story. That's amazing. Well, very cool, Tim. So I've had a blast talking with you on this podcast. It's been amazing. And thank you so much for all these incredible nuggets of wisdom, which, by the way, we'll be posting online all of the, all the information here and taking snippets and all that great stuff. But before we go, why don't you tell the audience a little bit more about how they can find you, your investment opportunities, or, how in general they can keep in contact with what's going on in your world?
Yeah. So as always, you can reach out to me on social media. I'm on LinkedIn a lot, Facebook a little bit less, but I am there. LinkedIn's probably the best spot. My website, harvestpg.com. That's harvest, P as in Paul, G as in George.com, or tvest at harvestpg.com. Those are always good ways.
Excellent. Excellent. Well, Tim, thank you so much for coming on the show. This was amazing. I had such a great time.
Hey, Derek, I appreciate it. And thanks. It's been great.
Awesome. Awesome. And for you listeners who have listened all the way to this point in the podcast, first of all, thank you so much for your listenership. And wherever you are listening or watching the podcast, please make sure you like, subscribe, interact, comment with us, because the more that we do that, we start appeasing those algorithm gods, and the algorithm gods will then help us get connected with more people like you, listeners, and also incredible guests, and continue to help keep the show up on the airwaves. So thank you for that. And Tim, once again, thanks for coming on. Really appreciate you being here. Everyone, this is Derek. I'm signing off. We'll see you next week. Take care.